Hello traders, welcome to another session. So in this session, we are going to be talking about trading ranges. So we'll be going through what are trading ranges, how to spot them on the charts, and how to use them. So we'll also be going on how the trading ranges can help you to overcome some challenges you may have been facing in your trading journey. So starting off, we are going to use an illustration. Then after that, we'll go through to the live chart and explain. Then at the end, now I'm going to select some few people to speak. And yeah, for the people that raise their hands that they want to speak. So just to know, this is the free session, right? This is the free session we are holding for today. So what are trading ranges, right? So I know majority of us have heard of trading ranges, and majority of us don't really know what they mean. So trading ranges are just an area in the market where you're looking to either get a point of interest or to either trade from, right? It's a specific area in the market that you're looking for a trade. So that's why we refer to them as trading ranges. So let's say, for example, the market is somehow in an uptrend. The market is in an uptrend, right? It creates a pullback like this. Now, when we want to spot our trading range, we are looking for a zone whereby we can find a point of interest to buy off from and continue to the downside. So if I want to mark my trading range using just this normal simple structure, I'll be marking it from this low, right? I'll be mapping it from this low to this current high where the market is at. So let's say if the market starts to reverse from here, if the market starts to reverse from here, right? I'm looking to buy off this zone. I'm looking to buy off from either a pure eye of this zone or an imbalance or anything. It doesn't matter the strategy you are trading from, even if it's alchemist, right? You're looking to buy off somewhere around this zone. So now, if let's say this is now our trading range, right? From this low to this high, this is our trading range. If you are looking to do any activity here, you are looking to do it from this range. And if the market happens to now invalidate this our trading range by breaking below it like this, we know that okay, this our trading range now has failed, right? We now start looking at a different trading range from this high to this low, which will be our selling trading range. So this is how our trading range works. So how do we use this concept in smart money concepts? How do we use this in true SMT, right? So I'm going to be illustrating to you how we identify these concepts using the valid break of structure scenario. So we all know that for the market to give us a valid break of structure, we need to have an inducement. Then once the inducement is taken out, we now have our trading, we now have our valid break of structure. So if I want to map this out, I will start from this zone here, right? I'll map out our break of structure, and I'm going to map out my inducement. That's my inducement, right? Once the inducement is taken out, my break of structure is confirmed. So after that, right, I have my trading range. So now this from this low to this high, it's where my trading range is. This is my trading range. So anything I'm looking to do, right, I'm looking to do it from this zone. If I'm looking to buy, if I'm looking for a PI, I'm looking to buy from this zone. If the POI should be within this zone, right? Let's say we have an order block here. This is the first things that you first need to do, right? Because when you come into the market, you first need a criteria to select the best zones. So first of all, you use a trading range, right? You use a trading range, then you can use inducement, you can use fake order blocks, you can use all the like to eliminate all the other blocks. Because when you come into the market, you have many types of order blocks. People have been asking which order block should I use, which demand zone should I use, which one will hold, which one will not hold. The thing is, you don't actually know 100% which one will hold, right? But now with some criteria like this trading range and inducement and all the like invalid order blocks, you can help now to like narrow it down. You narrow it down to a smaller limit so that you know when which one is more, has a more probability to hold. So this trading range will help you now to narrow down your other blocks, right? Because you might see another other block down here, you might see another other block up there, and all the rest. So now, if you have an other block down here, right, and you also have another other block maybe here, you have another other block here, you already know that, okay, this is my trading range. You are already one step closer. You will not expect the market to like tap into something down here. You will not be expecting to use another block here which will be left out because you have already identified your trading range. Now, how should you use this trading range, right? We know that, okay, this is our trading range. First of all, we need an inducement to validate a buy off of our trading range, right? Since this is an uptrend, we need an inducement to eventually be taken out. So once this inducement got taken out here, right, your trading range, now you can start looking for a POI. Now, what happens if you have multiple POIs in your trading range? What happens if you have multiple POIs in your trading range like this? A POI here and maybe another POI here. Sorry, I seem to be finding just the worst tools to use for today. So let's say you have a POI here, another POI here. So what happens in this case, right? You have already identified. The first thing you do is you already know your inducement. You already know your inducement, right? So from your trading range now, you cut off the part that is before your inducement because our trading range starts from this high. This is where our trading range starts and this is where it ends. So now if your inducement, if the first pullback in your trading range is up here, right? You cut off this part. You cut off this part. Nothing concerns you concerns this part though. Nothing that concerns you concerns this part. This part is already an invalid part to trade off of in your trading range. If your inducement happens to come down, right? If your inducement happens to come down like this, sorry for the funny diagrams. If your inducement happens to come down like this, right? Now you have an even shorter trading range, which is just this zone from this zone here to this zone. This will actually be a valid trading range because actually your trading range starts from here, but now you cannot trade before inducement. Like you will become the inducement. So now you have a trading range that extends down here. So your valid zone which you can be looking for buys will just be this zone. Now let's go back to the first example and say that is where your trading range was, right? That's where your inducement was. So if your inducement was up here, you have a bigger trading range here. Now we start from here, right? This our inducement here. We have another block directly below it. So this one will be called our decisional POI. It has a 50-50 probability. It can either work or it can either fail, just two ways. So if you want to buy off the first order block after your inducement in your trading range, you will need extra confirmations, and you also know that the other block can fail. So some people, what normally people do here is they risk less, right? If you have been risking 1% for your account, you come here, you can risk like 0.5%. I personally, I don't change my risks. I know why I don't change my risks. I reach $250, $250. There are some times whereby slippage will occur, but typically I tend to leave it on $250. So this is our trading range here, right? From this low now to this zone, this is where we'll be validly looking to enter the market. So now, if the market disrespects this one, we just jump from this one to this one. You forget about this other block here, that other block there, that other block here. You just come to the extreme one, the extreme unmitigated other block, and that is where you'll be looking to buy off of, right? In this case, this is where you're looking to buy off of, and you will target your external liquidity or whatsoever. So this is what we'll be looking out for. So this is our trading range. We have identified our trading range. Then we mark out the part. We mark out this part, right? This part that it's before our inducement. When we map it out, it helps us to reduce our trading range so that it becomes much smaller, so that our chances of error are not big again. So what happens if the market finally takes out this low? If the market finally takes out this low, right? So now this our trading range is invalid. So there are two ways here, right? If the market sweeps this low, if the market sweeps this low, that will not be considered an invalid. That will just be considered a liquidity grab, and the market will just continue up. But now, if the market happens to close below this low, right, we know that this our trading range has failed. Market is a probability. So if it closes below here, we know that this range has failed. We now have a change of characters. Now, when we have a change of characters, what do we do? What do we do, right? We start looking for sales. So if that occurs now, this from this high now to our current low will be where our trading range will be. So from this high now to the current low will be where our trading range is. So if the market is pushing back up and you identify, because here this is where our inducement should be, that's where our inducement is there, right? That's the first pullback, or is the last pullback that price made before started retracing. It depends on the way you want to call it, but it's just basically the same thing. So when that happens, right? When that happens, we now have a new trading range which we can look to sell off from. So we wait for market to take out our inducement and we can sell. So when you have your inducement closer to your POI, it makes it more it makes it like it gives it more probability for the market to play out, because the liquidity graph is still fresh. So from here now, what we need to do is just eliminate majority of these. We eliminate all these all those small other blocks that are here, because we know that okay, this is our inducement. So in this our trading range, this is where our inducement high is. So we'll be looking for a POI above here. This will be a more easier trade, because you can easily get a POI here without making mistakes, right? Even you can even afford to make a mistake here, because if you make a mistake here, let's say you have two POIs above here, right? You miss this one, or you buy off the middle one, then you can even afford to put your stop loss maybe a little bit further above this one to target this. Your risk to reward will be great, unless you want a sniper. So we have gone through how to spot trading range, right? And we have gone through how to use them. So now we need to show them on the charts. We need to show them on the charts how we can really uh, 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 implement this on the charts. So let me start with this here. If you look here, right? If you look here, we have a market. Let me outline it so that majority of you guys will understand. You have a market like this. Some of these things were drawn in a bigger time frame. So if I happen, for those that don't know how to market to spot these things on the real chart, you can always trace them like this and it will help you. You trace them like this and you extract it, right? You extract it. It will help you a lot. So now this is a chart I've just traced here. If I want to map out the chart, I'll start with my inducement here. The inducement was taken out and we have a break of structure like this, right? This is our valid break of structure here. So after this break of structure, what do we have here? We have our new inducement, right? So this last inducement we have here, it's within our trading range. So it's from this high to this low, it's from that low to this high. So this is where our trading range is. So we have already eliminated this session down here. So we start from above there, start looking from our trading range, which is a valid order block, right? So we first of all, it's advisable for you to start from above. So if this one is mitigated, you move to the next one until you find an unmitigated order block. So if you look well here, right? If you look well, you see that from this zone, right? This other block here, this is our break of structure. This is our trading range from this high down to this low. Some people can label this a weak low, right, and a strong high. So it all depends on you. So if you look from this high, if you take it from this high, see that this other flow here on and the other block had already been mitigated. If you come here, you see no imbalance. You come here, you see no imbalance, right? You see that the market has been mitigating all this as it goes down, as it goes down. So after our inducement here, which is this zone, you can see that we literally just have very few other blocks. This one, this one happens to be invalid. I know people know what I mean by invalid. This one as well, it's invalid. It's not it doesn't obey, it does not obey the principles of a valid pullback here, right? This is all insider move here. This one is also an insider move, so that's why I say this one is invalid, this one is also invalid, and this one even has already been mitigated, though it's an invalid zone. So we can see that the only valid zone we have here is this zone. This is the only valid zone we have here. You can see that when price came to this valid zone, you saw the reactions. You saw the price try to really respect this valid zone, but there was nothing price could do. So it had to break out and come to this extreme. So now on our extreme here, we have a full order flow, right? If you don't know how to mark your order block, or when you always refine, you miss out. You can mark out the whole order flow. I mean the last move before the down, the last move, right? The last pullback, there you can mark it out all. So this was our only valid pullback here. This was our only valid extreme order block, right? This was our extreme order block, and we mark it out. This was our decisional order block, and we start looking for ourselves. So from this our range, we selected just this, and we start looking for the sell. You can see the results here. So here we have majority of these results, right? Those are those results. Also down here, a lot of price action happened down here, which I'm not going to get into. If you look at this here, right, you see that we had this zone. We had a break of structure here. Let me allow me to really zoom out so that you can see better. Look here, right? We have our inducement here. We have this inducement here. And after this inducement has been taken, we have an internal break of structure. After this internal break of structure occurs, we also have our inducement here. So when this internal break of structure occurred, we had our internal trading range starting from this high down to this low here, right? Down to this low here. So from this internal trading range, we eliminate the part that it comes before our inducement. Now that we have eliminated that part, we start looking for a valid order block above there. Now, if you look here, right? If you look here, many of you will select this as a valid order block, but in this case, this is not a valid order block because it's caused by an insider move. Now, if you start from this high, right, you start looking down, you see that the only candle with an unmitigated with an imbalance before it is this candle. Is this candle. If I switch over to a smaller time frame, you'll see that this will be an order block. This will be an order block, a perfect order block with an imbalance before it. So this is where we got our second sell from. The sells are not just random. The sells are not just random. So why this market was generally in a downtrend like this, right? Why this market was in a downtrend like this? We are trailing this downtrend, right? We were targeting this zone, but due to this internal structure, I already know where my internal breaks of structures were, and I knew that there is possibility that the market might reverse anywhere. So when I was looking at it, I was also tracking this internal structure to like it should be like an early indicator to tell me that this market has switched from being bearish to bullish. It can happen anywhere. It can happen anywhere. The market can happen anywhere. And this internal structure really helps a lot. When this happened here, right? When you see that this change of character literally happened here, I already knew that price will not likely come down back down to this zone. Even though the market was showing that it was the structure here, I was also trailing it. So we had a range here. We had a range here. So what definitely happened in this range is we had our inducement, right? This was a consolidation. We had our inducement here. This is where the high of this inducement is. So we have this inducement here. The inducement got taken out, and we had our trading range here, right? Because we had a minor break of structure here. So this was our trading range. Now this trading range got violated. This was our zone here. If you map it out, right, if you want to map it out, you can see this got violated. There are times whereby the market fails. So once this got violated, I knew that okay, internal structure has switched. Internal structure no longer follow is no longer following our external structure. So what am I supposed to do? I switch my ranges, right? I switch my trading ranges now to bullish trading ranges. So we talked about this when I said when the market is pushing up and it's creating bullish ranges, when it is switch, it will now create the opposite of the ranges. So if you see here, right, if you see here, the market created this range here. This was our range, right? We are looking for to sell here, but when the market came above, it took out the high of the range and closed with a candle body. So it gave us a different candle range. It gave us a different body range, a different trading range. Sorry about that. I think I seem to. So from this low to this high, this is where our current range is. So anything we are looking to do is we are looking to do it within this range, right? We are looking to buy here and we are looking to buy within this range. So first of all, I said you need an inducement, right? And the closer your inducement is to your POI, the better. So if you look from here, you'll see that the market definitely pushed below and took out this our low. This our low. So anything that happened below, anything that happened before this zone, it doesn't concern us, right? We have eliminated this part as a part before our inducement for this our trading range. So it makes us with a very small place to play around with. So this is a zone where we are supposed to play around with. So if you look at this, when the market came now finally took out this our zones here, right? Many people would have been buying here, but you buy here, you got tricked. So once that happened, the market tapped into the only other block here, the only supply zone here. Now you can see that this supply zone liquidity was just resting above it, and it had also cleared previous liquidity under this consolidation here. So once it tapped, you can see the momentum, right? When you have pure eyes that have gathered liquidity, when the market taps into it, it moves very fast. It might not likely give you confirmation, or if it wants to give you confirmation, it would take like the move. You see that it will give a new maybe a new break of structure before it comes down there to give you your confirmation to enter, like this one here, right? Like this one here. We already identify our inducement. We wait for the market to push below, to push down to the extreme zone, and this zone had already also cleared liquidity here. So you see that we got this next trade. Now, basically this trade here, I think I cannot remember. Oh, yeah. I used the breaker block here. I kind of use a breaker block here if I can remember well. I don't tend to use breaker blocks a lot, but they work very well. They work very well. So I was looking at this. I'm looking at this, right? We might have another trading range here, but I've not confirmed it with external structure yet. So for now, I think I should open the. I cannot remember what strategy I use here. I must have gambled a lot here. Anyways, so that will be all, right? That will be all. I'll be opening the floor for people that want to ask their questions. You take your hand or you raise your hand and you ask your questions. Please, if you want to ask your question, you raise your hand or let me enable you. You indicate, right? Indicate, and if there's no question, then we. Okay, somebody has a hand up. I've allowed you to speak, so you can ask what you want to ask. Okay, another person.
Please, I've just joined late. I want to know what strategy are you using?
Okay, it's a part of SMC. It's called through SMC.
Okay, SMC strategy, right?
Yes.
Okay, do you combine with any other strategy like you had? Is it only SMC?
It's a like the strategy, right? It's an advanced type of SMC. It's not the normal regular SMC that you see out there.
Okay, okay, okay. Because what I'm seeing here is just kind of difference.
Yes, it's not the regular SMC that you see out there. If you are still new or if you have been trading SMC, right, I recommend that you should go through the videos on YouTube and you can testify if they're working or not, right? Because yes, you go through my videos on YouTube. I think the YouTube link is pinned in the Telegram channel. You just check there, you see it. So you go through the videos. I recommend you go through the videos, you backtest it, right? Try to understand the concept first. You see that it will definitely improve your trading.
All right, please make maybe you should post your YouTube channel on the group so I can go to join.
Okay, I'll repost it again. I'll repost it again. I normally post it a lot. I'll repost it again.
All right, sir. Thank you.
Okay, let me go to the
Yeah.
next
Good
person.
evening, Mr. Francis. Yes. Good evening, Mr. Francis.
Yeah, good evening.
Yeah. Yes, my question is very straightforward. May I ask which higher time frame do you rely on as your first higher time frame? More like your higher time frame to look at for structure and all that. Because I observed that if I'm using H1, H1 doesn't really give big moves before it kicks me out and tests it. So,
Okay, okay,
yeah. Okay, go on.
okay. So there's no best time frame. I will not lie to you. There's no best time frame. When you get into the market, right, the first thing that you need to do is you have a bigger time frame bias. You know where the market is going to on a bigger time frame. That's one of the things I can recommend. There are many ways. There are many ways which you can find daily bias. People use CRT. Sometimes I use CRT. I know how CRT works. I've been trading for long that I've seen many strategies that I can actually use to find daily bias. Also, I think I also have on this SMC, right. I also have a way that I can find my daily bias. I don't think I've thought about it a lot, but when you use yes, when you use your daily bias, right, you already know where the market is likely to go. Now you're looking your small time frame, your small time frame, like the way my mentor taught me, right. You move according to don't you cannot just move from daily time frame to 5 minutes time frame and you want to get an entry that will not kick you out. That entry will kick you out. You mess up your brain. So when you move, right, it has a way. I cannot remember. I will not lie to you guys. I don't remember the way he calculated it, but I know the time frames. He start when he uses 1 day for his bigger time frame. He will use 1 hour for entry. When he use 4 hours, he will use 15 minutes for entry. When he uses 1 hour, he use 5 minutes. And if he uses 30 minutes and 15 minutes, you will use like 1 or 1 3 around 3 to 1 minute for entries. So you need to combine them in a lot, right? Don't go and want to maybe get just that sniper. That sniper, just work with just work with your risk management. Work with your risk management instead of sniper. Forget about sniper. If you work with your risk management, 1:3, 1:3, 1:4, with a 30-35 win rate, you'll be good. You'll be good. You don't need to have a 50 win rate to success to have success in this market. It's just now the discipline.
Yes, please. Can I talk?
Yes, you can go ahead.
Yes, please. I've seen that some of your trades, the place where liquidity has been swept, that place normally creates a new variable demand zone. It's like that, right?
Yes.
Yeah, but the thing is that I don't know how to identify the valid liquidity sweep. That's my problem. Please. Can you teach me something?
Okay, I'll go straight to a chat we had on USD JPY. Oh yeah, I think that rate hit stop loss, but I'm okay. Thank you. So I'm going to be showing you a chart, right? I'm going to be showing you two charts. I've had two of those scenarios.
Okay.
I'll explain them to you the way we look at the liquidity sweeps. If you want to enter off those zones, okay. So here, let me go over up to a good time frame where this happened. On Was it on Friday? I posted this on a WhatsApp channel. I posted this on a WhatsApp channel. I don't know. Let me reduce this. Let me remove this too. I had a liquidity sweep here. I was looking to sell, but when I sold off this zone, market came and whipped through here. I posted this straight on the Telegram group while I was crying. So let me show you a typical example of how this type of entry works. Let me show you. This is a. I think this is a good. No, these are good entries I had here. Continue it. Okay. Here, look at this high. This high to this low, right? This is where our trading range was. Now, this is where our trading range was, right? We had our inducement here. You see that this move here was lower than this, so this got swept. So this is where our inducement was. So when this got swept, now I was looking for a trade. I was looking for a trade. So the only zone was this zone. This was our extreme zone here. Now, when the market tapped into this zone, I was still sleeping. I sleep a lot. So when this market tapped into this zone, I was sleeping, right? There was a small change of characters within here on the smaller time frame. So what happened is when I saw that this market had already tapped into this zone and left me behind, I was looking to trade off this zone. But when the market came up to this zone, when the market came up to this zone, right, instead of just continuing to the downside, instead of continuing to come and tap into this zone, it swept this zone. Now, when it swept this zone, I went below, right? Let's look at the 5 minutes. let, let me show you some of these things. Majority of the people have learned from maybe my mentor, and some of the concepts have been updated for those that don't have that are not in maybe in a paid mentorship of my mentor, or in my paid mentorship, they don't really know these rules. So this was a sweep. That was a sweep here. This was a sweep here, right? I've gone below a lot. So this was a sweep here. Once this sweep happened, right? Once this sweep happened here, I waited for a change of characters. The reason why I marked this is because this change of characters was not valid on the 15 minutes. I think I took this entry, but on the 15 minutes. So now this once this change of character occurred, I waited for price to pull back into this zone that swept, right? This zone that swept here was our high probability sell zone. So once the price pulled below up back to the zone, I sold. I sold and I targeted. That's it. It was not something too crazy, but that's it. It worked out well. So that is how we select those things. That's how we select, right? That's how we select them. If you have another question, you can ask. This is a zone here. This zone swept, right? This zone swept, drop. You can see that when the market came back to this zone that caused this swept, it was also a high probability trade, and we took it. Though the market did not completely take out this low, but at least it gave us around a one is to. Let me see. It gave us a one is to. That was a one is to two point
Okay.
six.
Please, I have the last question, please.
Yes, you can ask.
Okay, can you teach me the difference between inducement and engineering liquidity, because I don't really understand what's the difference.
Okay, the difference between inducement and engineering liquidity, right? So
Yes.
let's use this as an example. We have a market is pushing up like this. There there are many definitions of something like inducement, engineer liquidity, and all the like. Many people will use the concepts differently. We have a market that is pushing up like this, right? Let's assume that this is our trading range. This is our trading range from this low to currently where the market is. something like this, right? Let's say we had a valid break of structure here. I don't want to go ahead and illustrate all that. We have a valid break of structure here and we have our high here. Now, starting from this high, right, the first thing you map out is your inducement. So the first pullback, right, on the definitions you'll be able to spot the difference. So the first pullback here, it's where your inducement is. The first pullback starting from where price is, if you look downward, the first pullback that you see, that will be where your inducement is, according to the true SMC we trade. Now, right, directly below the first pullback or the next pullback below that first pullback, which is your inducement, it's where your decisional POI is. So this is your decisional POI. And now this zone, right? This zone here is called an SMT. This is a smart money trap, and it's the other block there that is referred to the smart money trap. The low will be referred to as engineered liquidity. So majority of the time, this engineered liquidity happens when majority of the time, right? This engineered liquidity is very close. It's very close to your POI. It's very close to your POI. So the reason why for this is because this POI here, that fake POI, this engineered liquidity that is found on this POI here, right? It's carefully designed to trick you to just get into that trade that you want to take a little bit just early so that it will take you out. That's why they call it engineered. It wants to engineer your mind to play around with your mind for you to get into that trade a little bit early so that it will take you out and move in your direction. So majority of the engineered liquidity you will spot in the market will be very close to your entries. Will be very close to where the real order block is. If you see an order block a little bit below here, and you look at it, right, you see another one just a little bit above it. Is there's a high probability that that other block it's an engineered liquidity. So any question? If you
No, no, it's okay.
yes, so you need to know that the first pullback is your inducement. The first pullback is your inducement. So let me check and see if anybody wants to ask another question. Let me see. Okay, Jason Smith. I think this should be okay. The next person is up. I think is Jason Smith. Jason Smith.
Evening, sir.
Yeah. Good evening.
Yes, I see that the topic today is about training ranges.
Yes.
Okay, I have the first question I have is if you're using a 2 hours, which intermediate time frame can you use for your smaller time frame?
If you are using a 2 hours, it depends. Sometimes, right? Sometimes some time frames are off to us because we use the free trading view. I myself, I don't purchase the trading view all the time. But you can use maybe the 10 minutes, or you can use 10 minutes or 15 minutes, right? But you should know that if you are using an intermediary time frame, you can blend in maybe two time frames like 10 minutes and 5 minutes to get that best entry that you are looking for.
Okay, okay. Okay, now the second question concerns these trading ranges. So on this diagram you draw, that's a good example. Let's say, for example, this last point where you mark this blue line, let's say that was your inducement, right? Then the market has not made none of these pullbacks. You see, he has just made this first inducement and gone up. Then now, that's on your bigger time frame. Now it starts retracing back down. Do you usually trade retracements?
Like let me try to illustrate what you are saying so that I can better understand what you might be talking about.
Yes.
So it's not a law that you must get into this entry exactly here, right? To avoid all of those wiping out and all the like, you can wait for the market to start maybe trending up. When it starts trending up, then you wait for the zone to be swept, and you wait for an inducement. Then you can take your entry from here and you target that very zone that the initial person that was targeting. It's not a must that you must enter at the beginning at the reversal of the trend, because this reversal of the trend is very tricky, especially for people that don't really understand the market well. or that you are still struggling, this beginning of the trend is very mad. It's very chaos here. It has a lot of
Yes,
a lot of bad scenarios here. There's sometimes where the market will come and give you a change of character and still continue to the downside.
yes, happened to me on Gravity Pound JPY last week.
Yes, that's it. The market is strategies are not 100% effective. Sometimes, even when the market does everything according to their strategy, will still fail you. That's some of the reasons, right? Some of the reasons the market is just a market. You don't judge the market. The market is always right. So let me go back to the other person and see who is the next person.
So
O-
thank you for answering the question.
Okay, no problem. So for those that are here, you can Mr. Gold Digger FX. Please, you are up. Hello. Should we end here for today? I'm not seeing any. Okay.
Good day, sir.
Yeah. Good evening.
Good day, sir. Yeah. Please, sir, if the market, for example, like for example in the picture in the chart here, give a break of total to the upside and it's reversing back down. But a breaker block is available and another block is available. Which of them will you precisely use?
Okay. See, right. You know about. I don't think I've thought about the concept of order flow. I've
No,
mentioned it.
sir.
I've mentioned it a little bit. So it's not really that different from. It's not really that different from. The other block, the breaker block. It's not that different. The only difference now is maybe you might have multiple order flows. So I can decide with that criteria and still use order flow. When
Well, can you explain the other flow a little?
Yes, let me explain to you. This zone, right? If you have something like this, right? The whole of this zone
Yeah.
like this, it's a point of interest. The whole of this zone is a point of interest. This is our last order
Okay.
flow. This is our order flow, right? And within this order flow, we have taken out there's an inducement before it. So the whole of this zone is an order flow. Now, the reason why I personally don't use this is because it tends to be very complicated and gives a very large zone. So now, whenever this order flow is mitigated, right? Whenever this order flow is mitigated, we tend to have a reaction that the market might just continue up. So if I'm looking at the order flow here, and when once this gets mitigated and it's below my inducement, and I see any smaller time frame change of characters, I can get into my trade. But this requires
Okay.
another type of mindset that is not good. It's very complicated. So this is an order
Yes, very.
flow. This is an order flow. The order flow starts from. In fact, the order flow is a pullback. The whole pullback is an order flow. Like, let me show you something. Let me look at more recent price action so that I can easily demonstrate that to you. Let's look at these zones here. Let's look at these zones here, right? Let's look at zones here. Now, if I switch over to the daily time frame and I expand and let me expand it. You look at all those zones, you look at all these zones here, right? You see
Yes,
that
sir.
this zone here this zone is an other block. Where did the other block start? It starts from this zone right down to this zone. So basically, other flows are just gigantic other blocks. They're just gigantic other blocks. It depends if the market will tap and respect just from the tip of the other block and continue up or not. So that is
Yes.
the way I personally see my order flow. Maybe my mentor might see it a little bit different, but order flow, we use order flow first. I personally don't use order flow first, but my mentor will tell you to take order flow as the primary. We have a hierarchy where we follow it, right. Price taps into we prioritize order flow entries. Then after that, we come to order block, and then we have how is it called? We have weeks. We have weeks, and
Yes.
I've forgotten some of them. I've forgotten some of them. So next week, what I'm looking for with this pair is I was hoping maybe price can tap into this point of interest and I'll buy. But what price has also done here is price has also swept this high and it's looking to maybe a little bit downward. So I don't know if I have a valid reaction of this zone I might buy. But the reason on Friday I was looking at this zone because it swept this. So any more questions?
Yes, I have like two more questions. The second question I have is this: if, for example, in GPJPY, I have been following it up on buys, so GPJPY, so it started retracing backwards because of in 2 hour time frame. First of all, I went to the higher time frame. I saw that GPJPY was on a kind of uptrend in weekly time frame. I started scaling down, scaling down. So it mitigated the first demand, second demand, and now it's reversing a bit. Now, if while reversing, it creates first POI and inducement, second POI and inducement, third POI and inducement. Which of them will you buy from? Will you buy from the extreme, or you just buy
Ex-
from anyone that is available?
extreme will be the extreme is the best, right? Extreme is the best. You know why we take the extreme POI? You know why people, if somebody that trades an aggressive entries will always take the extreme POI because why? It's like the last line of defense, right? If you rule a country, you not like your last line of defense to fail. You make it as strong as possible.
Yes.
It's like your last line of defense. So if
Yes.
somebody comes to your, if let's say you have your gate is not normally as strong as your door.
Yes.
That's why we classify them like that. So you want your first entry. You want to like use the extreme pure eye. You use the extreme pure eye. If you want more, like you want more accuracy.
Yeah.
So that's it.
Okay, but if it doesn't come to extreme POI and start
If it doesn't come
moving
to your
the direction,
SMPOI, you miss it. See, right? Most of you trading like, see, don't. The market will give you another opportunity, right? If you miss an opportunity today, you don't cry. The market will always give you another opportunity. If you miss an
but
opportunity, you like your capital still preserves. Your capital is still preserved, right? The first thing you need to look into for the market is to try and preserve your capital as much as possible. So long as you have that capital, there is still hope.
yes, yes.
Don't instead be in a hurry and go and blow your capital.
Okay, but sometimes it used to be in higher time frame, like in 2 hour, 2 hour order book. So if you miss it, it will take around maybe like 1 week before
See, right?
can just
Through back testing, right? What I've personally experienced with pairs like we have gold, we have GBP, JPY, and we have BTC.
okay.
Those pairs tend to respect breaker blocks a lot. That's from my own back testing. It tends to respect breaker blocks a
Yeah,
lot. So if from your back testing you have seen that okay, this pair respect breaker blocks, you can use it. Breaker blocks is a good entry criteria. It's very good. If you see that it
yeah.
respects it,
I mostly use other blocks on GPJPY because
ye-
I mostly trade GPJPY.
yes, if you see that it works well for you, right, you need to be patient. Don't take 5 trades. Don't want to take 5 trades in a day. Don't want to take 5 trades in a day. You can take smaller trades. You can take smaller trades and yeah, take fewer trades which are high
Yes.
probability.
And sometimes I take one.
It's not bad. Sometime majority of the week I just trade because maybe I have one or two people in a VIP that are expecting signals. What the way I trade, right? The other week I took this trade. This is a trade that we saw in the last class. This
Yes.
this was a trade that we saw in the last class. I took this trade. I risked I took two positions 0.01 around somewhere around here, and this was 560 something dollars or lots of lot. I was targeting to reach this zone. The trade
Yes.
this trade has played in your emotion. You never reach this zone. So here that's around 142 pips.
Yes.
I got tired of it. and I exited. I exited with just about 1.7, which I was supposed to get at least. Uh, I exited with around about 2.4. I was supposed to get at least 2,000 per position, but I got tired.
Okay.
I got tired,
Yeah, yeah.
and my mindset somehow.
Yeah, but I have a question that I would like to ask that my main problem in trading, not actually mostly analysis.
Oh, what is it?
Okay, so I have problem with placing a trade and holding it. One. The second one is problem with maybe after analyzing the setup and then the setup reaches your point of interest, then taking the trade. I will now start deciding with myself.
It's because your risk management is not in check. Your
No,
risk,
I actually use good risk management, but it's kind of a psychological issue.
that's why I'm telling you
Sometimes
that.
if I
When you use risk management but you are still afraid of losses, it's because that risk management is not actually correct. It's somehow lacking something. When when
yes,
when 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 you have when you maybe it's because you are trading a personal account. It might be because you are trading a personal account. You are afraid that, oh, if I lost today, tomorrow it might mess up my psychology. But if you are trading somehow like a big account, a pro forma account, you know that, okay, now I know my this thing. I know that if I just stick to this, I'm going to pass this account right. And
yes,
and when the market comes to your point of interest, if you are buying, you buy. You just allow the trade either hit stop loss or you hit take profit. You know that if you continue doing like that, you have an edge. Because majority of the time, right, when I try flipping an account, I blow it majority of the time. If I enter the market, I want
yeah.
to flip an account, I'll end up blowing it. I took a trade on I sent a trade on USD CHF. I wanted to flip an account with this trade. Let me show you how precise the entry was. It was a very small entry. I was targeting right down here. It was a smaller entry. I think I sent it on Friday. This trade like this, we did this small move like this, I blow my account. With this small move like this, I blew my small account. Uh,
Whoa.
but that's a trade. It hit TP. People in a VIP were rejoicing and all the like, but I blew my account. It's not. It's the psychology. The psychology of trading some certain types of account is different. It's different. That's why you see that somebody
Yes,
might come and suffers a lot because the person now when he lost one, right, if you have like a 100 or a $200 account, if you lost $25 in that account, you're already like, oh, my account is already, so it's already a 25% gone. 25%
yes, yes.
gone. Now, how do I compose now to hold that the next trade and let it hit TP or let it hit stop loss?
Yeah, yeah.
But in that time of panic, right, you forget to know that, okay, if my next trade hits stop loss, if my next trade, let's say my next trade hits take profit, I might make like $75. So so when your mind automatically, when the next trade automatically gives you $25, the first thing your mind is telling you is that close this trade and recover your $25 first. You
Yeah,
forget
something like that.
you forget about what you already did. You forget about your risk
Yeah, so I,
management that will give you an edge.
I want to know three things. How will I maybe analyze a pair and wait for it to reach? Like, for example, I may analyze a pair like this now. Then, before the pair will come to my entry, I've gone to gold and I've started doing different things and lose the whole money I want to risk on this particular pair, which is the only analysis I want to make. Then, secondly,
Technically,
if
right?
I find it,
Technically, yeah, I get you.
if
That
I
thing
find it
also go
But
go
if I
on.
take a trade on this particular pair, if I take a trade on particular pair, if you start going into my SL, almost to my SL, I'll say like, okay, it have almost hit SL. Let me take the remaining, let me cost the loss. And when I call the loss, to start reversing.
Let me show you something last week. Let me show you something. That thing that you're saying, it happens to me as well.
Yes, I'm fighting with that because I don't have problem with analysis like that. It's just
It happens a lot.
emotional.
This trade you
Because
see here,
there are varieties of pairs that you can trade. So it's too much. Before I can go and come back, the money I plan this on this pair has gone.
this trade you see here, right? I gave this trade in a VIP on
Yes, sir.
I think it was last week. Now, when the trade started dancing around here too much, all this is too us. It spent the whole day. It did not move. I asked these people to close it out. When they closed it out, the next day now this move occurred.
Yeah.
I got tired of waiting for the
This,
trade, and that day in the VIP, right? That day was last Friday. It was not this Friday. It was the previous Friday. That day in the VIP, we took losses. Now, when it came to the next week, right? What I discovered is
yes, sir.
majority we I gave around 5 trades. One of them got took a loss. Now, all those trades that I gave on Friday, we closed them on break even, and we closed some of them with losses. I also gave a trade on that day. I gave a trade on CAD on Canadian dollar. Was this CHF or JPY? I cannot really remember. I gave a trade on Canadian dollar. Yes, this was it was this trade. I gave it immediately around this zone here. When I gave this trade, it started dancing around, dancing around. We closed this trade, right? I closed it with small losses because I entered a little bit late. I closed this trade with losses, and all this move like this occurred the next day. So there is a need for you to have like a personal to have an account which you can play with. If you want to play, have an
Yeah.
account which you can play with, and have an account which, because I know that that temptation is there. Even me, I cannot tell you I've overcome that temptation. It's there. It's there, right?
Yeah.
So you,
So what is the best like I can do to detach myself from my trade so that I'll not maybe place a trade now and every now and then I'm going back to the trade so
you
I can maybe to
first
my
of all, right, have an account. See, first of all, you need to have an account that you can play around with. If you have an account that you can play around with, then when you open your trades in a maybe in your funnel account, you can go around and play around with your account. Nobody will judge you. Right? If you lost in the account, you cry a little. But nothing really major that will really cause you mental crisis. So
yeah.
second of all, what I personally did is I bought a PlayStation. I play majority of the time when I'm playing, I forget about the market. When either I come back later and cry, or I come back later and rejoice. That's it.
Yes, sir. That it helps. It helps. It helps. But the criteria of maybe waiting for a trade to breach and then you don't have any confidence to place a trade, is it normal?
It's normal. It's normal, right? Let me show you. I think I have many cases. When look at this. Look at this trade. I hope this is a pair. I'll show you a very nice trade. This trade here. Do you think I took this trade? Look at this. You think I thought I took this trade? After the This is the trade. I took this trade here. I took this trade here. But this market like this,
Uh,
it suit me out. It dealt with me. This market like this, you see this suit here like this, it dealt with me.
yes,
So
sir.
now when that happened, right, I had a point of interest here. This point of interest was very clean. This point of interest was very clean on the time frame I was looking at. I would think let voila. C'est ça. C'est ça. You look at this point of interest, it's very clean. But I did not take this trade.